gold out of the whole system completely. Because gold is still the rival. And it looks like it's not only the rival, but it's beating the dollar down into the ground. I mean, from the Treasury's point of view, you do not want to talk about gold. No, Jose, forget it. And when it comes to auditing the Fed, all the rest of it, they will sit on that as hard as they can, and they know how to do it. I think that whole exercise will come away with, people like Musk and Ron Paul and all the rest of it frustrated, and the word being spread by the Treasury that all this is conspiracy theory. Gold is retaining its value, is doing what it should do. It's retaining its value, and it's credit going down the Swanee. And that's what the dollar is.
In the past few days, U.S. gold reserves have been in the spotlight after billionaire Elon Musk, also the head of the Department of Government Efficiency, and President Donald Trump renewed skepticism about the quantity of gold stored in U.S. vaults and announced their visit to Fort Knox Bullion Depository for an audit. Less gold reserves in Fort Knox could erode confidence in the U.S. dollar, leading to depreciation. This decline would make U.S. imports more expensive, contributing to inflation while making exports more competitive. Doubts over U.S. gold reserves could also increase demand from investors and central banks. Emerging markets, which have been stockpiling gold, could accelerate acquisitions, creating price hikes. In this video, head of research at Gold Money Alasdair Macleod mentions that efforts to audit the Federal Reserve or reintroduce gold into the system will be resisted, with officials labeling such initiatives as conspiracy theories. Ultimately, Macleod argues that gold remains valuable while the dollar's credibility steadily declines. Gold prices recently soared to unprecedented levels, reaching new record highs above $2,900 per ounce. This surge was fueled by renewed fears surrounding the U.S.-China trade war, a weakening U.S. dollar, and broader geopolitical instability. Concerns over inflation and economic stability further amplified the precious metal's allure, as the Federal Reserve's potential easing measures continued to exert pressure on the U.S. dollar. While reflecting on the market, Macleod rejects the idea of gold being included in tariffs. He dismisses gold-backed bond proposals, stating the Treasury wants gold kept out of the financial system as it remains a key rival to the dollar. Since the federal government stopped using gold to back the dollar, the purchasing power of a single dollar has dropped considerably. Fiscal policies like low interest rates and increased government spending manipulate the money supply, often increasing it. Looking at major fundamentals, Alasdair Macleod doubts U.S. gold audits, citing reliance on sealed chambers instead of verifying bars. He points to Germany's repatriation issues and claims the Treasury has long suppressed gold prices, suggesting much of its gold may be gone. Now we present the clips of Alasdair Macleod's insights from their recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I think it's unlikely that gold would be included in tariffs because it's a class 1 asset. You get the banking system would turn around and say, look, no way. It's as simple as that. Not only that, but most of these stories came from Trump's team before they assumed office, and it's all very well, someone like Besant, who's a hedge fund trader, saying, I'm bullish of gold and all the rest of it, and when I become Treasury Secretary, I'm going to do this, do that, and all the rest of it. But as soon as he gets into those gilded portals of the U.S. Treasury, the permanent officials will take it to one side and say, look, this is the reality of the situation. The reality of the situation is we do not want to undermine the credibility of the dollar. Don't talk about gold. It's off limits. Quite simple. And when it comes to, and this explains how he's sort of, turned around, of course. I mean, this always happens. This business of a 50 or 100-year gold convertible bond, forget it. That's not going to happen either, because what are you dealing with? Are you dealing with dollars that need protecting in gold? I mean, this is not the Treasury's narrative. They want to keep gold out of the whole system completely. Because gold is still the rival, and it looks like it's not only the rival, but it's beating the dollar down into the ground. I mean, from the Treasury's point of view, you do not want to talk about gold. No, Jose, forget it. And when it comes to auditing the Fed, all the rest of it, they will sit on that as hard as they can, and they know how to do it. I think that whole exercise will come away with, people like Musk and Ron Paul and all the rest of it frustrated, and the word being spread by the Treasury that all this is conspiracy theory. That's what they do. So
I'm sure they'll find a sympathetic
forget
judge
all
to
that.
block
It's
access.
got nothing to do with gold. I mean, gold is retaining its value. It's doing what it should do. It's retaining its value, and it's credit going down the Swanee. That's what the dollar is. It's not a proper audit. I mean, if you have a proper metals audit, every bar is checked. It's checked for its presence. It's checked serial numbers and all the rest of it. Checked against records, the whole thing. What they have, as I understand it, in Fort Knox and elsewhere, is they've got sealed chambers. Basically, if the seal hasn't been tampered with, then everything there is all right. That's the audit. Now, you can believe what you want. Look, the fact of the matter is that, we'll switch to the New York Fed for a moment. The New York Fed stores earmarked gold for foreign central banks. Germany wanted 300 tons back. I think originally 600. That was negotiated down to 300. 7 years, they said it would take to get it back. Now, and not only that, but I understand that the Bundesbank's records of bar numbers and all the rest of it didn't tally with what was eventually returned. So it's quite clear that there's some very, very, skullduggery going on there. Now, the other thing, as far as the US Treasury is concerned, they have been suppressing the gold price by propaganda and also market dealers through the Exchange Stabilization Fund and so on and so forth for the last 50 years. Now, a lot of the gold which has gone out in lease would have gone out from US Treasury coffers. That's all you need to know. I mean, a lot of the gold simply is not there. How much? We don't know. But the point is that, you're not going to get a proper audit. They're going to sit on this story. They don't want to tell us what they've actually got, because certainly there is, a huge, great gaps, if you like, in the whole of the Treasury story. They're going to try and sit on it.
In the interview, Alasdair Macleod sees gold in a runaway mode, attributing its rise to the deteriorating purchasing power of credit. He argues inflation is far worse than official data suggests, driving investors to gold as a safe haven. Investors have seen this trend play out for years. Gold is up by more than 75% over the past 5 years, while the US dollar has lost more than 75% of its value relative to gold over the past 5 years. In his assessment, Macleod dismisses the DXY's relevance to gold, emphasizing that Trump's trade policies could weaken global demand for dollars. Comparing the current environment to 1929 without the gold standard, he warns that the world faces the largest credit bubble in history. The Federal Reserve's balance sheet soared 115% during the epidemic, equivalent to injecting $200 billion of anti-aging serum daily into the financial system. The side effects of this monetary steroid are emerging. The purchasing power of the US dollar has evaporated by 87% compared to 1971, and the average family needs 3 wages to maintain the living standard of 30 years ago. Let's get back to the interview.
I think, all you need do is have a look at the charts, and you can see that gold is sort of pretty much in runaway mode. Now, it's quite natural in human terms to think, oh, hold on, it's gone up to, and it's getting close to $3,000, and surely that's a big number hurdle, and it's got to maybe consolidate a bit before it goes through there and all the rest of it. Yeah, it's all true. But actually, if you look if you look at it in the context of money, because gold is money and the rest is credit, as we've discussed before, then actually what you're looking at is the deteriorating value of credit in terms of purchasing power for goods and services. And we're now beginning to see what they call inflation, rising prices, which actually is debasement of the currency, or falling values for credit. We're beginning to see that again. The numbers are sort of coming in higher and higher. And of course, these are all government figures, so they're completely unrelated to reality. The reality is that the cost of living is rising far faster than the government will admit. Any government will admit. So, where does this leave markets? Well, they're looking at this, and increasingly people following the lead of the central banks are realizing that the risk is not in gold, but it's actually in credit. So if you want to trade this as an investor, And my goodness, you take your life in your own hands, because actually you're looking at this through the wrong end of the telescope. You may get it right. You may be clever. For the vast majority of people, the answer is to just keep stacking, keep stacking. Just because what you're doing is you're getting out of credit. Well, first of all, the Dixie has got nothing to do with gold. The Dixie is a relationship between the dollar and other currencies, not gold. So we're talking about credit relationships in the case of Dixie. Now, I mean, what I would say, however, is that there is an awful lot of foreign ownership of dollars. Trump's trade policies means that the requirement to hold dollars, if you like, to settle international trade, on balance is likely to diminish for foreigners. So they are likely, I think at the least, not to have further demand for dollars. So that probably explains why the Dixie has come back from that 110 level to currently 106 and change or whatever. As for where the dollar goes from there, I mean, quite frankly, if we see a further deterioration in the general confidence in credit relative to gold, then I would guess that Dixie would recover against the other currencies, simply because, Steve Hanke says it's the least dirty shirt in the laundry. So on that basis, I think to look at the Dixie is actually the wrong way of looking at it. It really is. There are bigger things afoot, I think, which are likely to undermine the value of credit. I mean, not least Trump's policy of isolating America from the rest of the world in trade terms. That has got serious consequences. It's got serious consequences for the global economy. Now, China has actually insulated herself from this. But if you look at the European economies in particular, they do a lot of trade with America, and tariffs. And only yesterday I saw something, I don't know whether it was true, something to the effect that Trump said that no, he was going to impose 25% tariffs on Canada and Mexico. That's happening. He's sort of thing. This sort of business basically is very bad for the global economy, and certainly for economies which trade with America. I mean, this is a repeat of Smoot Hall in 1930, which, coupled with the popping of a bubble, which is actually, we've got the biggest bubble ever now, if you only stood back and tried to look at it, credit sensibly. This is the biggest credit bubble in human history. So combination of that and trade tariffs. I mean, you've got 1929 all over again without the gold standard. So this is not good. This is not good.
If a full audit revealed that the reserves are lower than reported, it could send shockwaves through global markets, prompting a sell-off of U.S. assets and creating a ripple effect across international markets, as per mining.com. With gold prices rallying almost 45% over the past year and up nearly 10% since January, the metal's status as a safe haven asset remains firmly intact. Given the ongoing erosion of the dollar's purchasing power and rising skepticism over U.S. gold reserves, could a global shift toward gold become inevitable? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.